Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market gained ground again last week in dull holiday trading. Investors bought right out of the gate as we made a return to Merger Monday. We saw Schwab on Monday come and take up TD Ameritrade. They're buying that company to compete in a better way by lowering costs. They say that costs will be lowered significantly joining the two companies. And Louis Vuitton buys Tiffany, TIF, because everybody's always going to be buying those high-priced luxury goods. Big question about that as moving forward. So you got to wonder about that combination. But Louis Vuitton has got many brands, so Tiffany just going to be another one of those. Monday, Tuesday, Wednesday, all of those days saw the markets moving upward on White House comments that the Phase 1 trade deal was close. After the close on Wednesday, though, President Trump signed the bill that supports pro-democracy protests in Hong Kong, and he was expected to sign that. There was some question about it and some fear that that signing would then bring the problems again as China could react, but China hasn't said anything really yet about that. Well, maybe they made a few words, but nothing really as far as retaliation goes, so it remains to be seen whether they're going to respond to that yet. But futures did fall on that news, and then they just chopped sideways. No real damage, minor decline as far as that goes. And we have just a kind of a sloppy couple of hot days here surrounding this holiday on Friday on the 29th here of November. Extremely slow and down just a little bit. Friday did see some really bad numbers out of Japan and South Korea as far as their data goes. Asia stocks move lower, and that helped the U.S. stocks soften, but again, it's not very much, just some modest declines. Japan's retail sales, they collapsed 7.1% for October. And they, of course, say, well, they have room to stimulate, and they're working on some big fiscal spending package. Here we are, almost 3 decades of the same policy that does not work. Their result of that is their debt to GDP is now coming up around 250%. And this does prove the definition of insanity, doing the same thing over and over again and expecting a different result. They're not going to get a different result, and until they free those markets up and stop with all the government manipulation, they're not going to get any better. And they have lots of other problems out there demographically. U.S., well, following the same path, and while the debt to GDP may not be quite as bad, and other countries are, way up there, these policies are just doomed to fail. And until we get free markets, free economies, governments out of the way, we're just going to get more and more of this slow growth, government manipulation, and markets that drift up by the money that flows in there until inflation comes. And then when that happens, well, game over, because then it's time to pay the piper. Our analysis right now for the stock market remains the same, and all this background news is just noise. The trend is up, and we thought it was going to be up into January, early February. That has not changed, but after that, we say look out. We think that this money flow that we're seeing into the equity markets is going to change in a big way. Actually, we think that metals, commodities, they could be the big winners, and that if money starts to flow in that direction, getting a little uptick in oil in gold today, so we're starting to think maybe something is happening. When that happens, you're going to see commodity stocks do well, commodities do really well, and the rest of the stock market gets slammed. That's what we think is out there for 2020 and into 2021, maybe 2022. Yes, long bear market, that's what we're talking about. I have a lot of critics out there that say, when I say that I don't know what I'm talking about. Of course, I've seen markets for 45 years. How long have you seen markets? Just through some little bull market here for the last 10 years? Well, we're going to see who knows more about market history. Anyway, stock market, we believe, will be firm into the beginning of the year and into the first quarter, and then trouble. We're nibbling on gold right here, and we'll talk more about that in a little bit. Stock market for the week, major indexes, they're up between 1 and 2%. The Russell is the best, as expected. We thought small caps would take off. They broke out of some resistance area, and that's exactly what happened. Bond market unchanged on the week, basically. The 10-year yield sitting about 1.76%. Gold, which was really languishing, just kind of sitting a little bit down on the week, has reversed here on Friday to a tiny gain on the week as it climbs up here on Friday, and saw that coming. I added a little bit of gold to my positions in here, so I think there's something coming in here. Dollar was up, and then it kind of rolled over, so we think that the dollar is going to be kind of in a choppy period. I'll show you that coming up in the short-term view also. And oil, a really bad day as it breaks this little pennant formation and moves down on Friday, almost $2 in here. So a bad Friday for the oil market. Brief opening here that we have, and we're going to come back in a second, and I'm going to bring you the best and worst for the week as we look at our life's weekly chart patterns in here that gives us our sense for cycle analysis. All right, this is what we're going to do. We're going to look at the best 5 stocks of the week and the worst 5 stocks of the week coming up. Interestingly, in the worst, we're going to look at natural gas and some gas stocks because that's what really fits into the category of the worst for the week. Let's switch over now. This is what our gold chart looks like, by the way, on our side-by-side, but I'm going to get off of that and come back later to this, and we're going to go to stocks. Now, in the best of the week, everything basically is in retail except for maybe one. This is Bed Bath & Beyond. This stock gained 17% on the week. Now look at this big up week that you see right there. Bank of America loves this stock, and they think that the turnaround prospects are great. Look at this big up week that you see right over here. It's not a very expensive stock right now, Bed Bath & Beyond. It really got hit for a long period of time. The turnaround prospects they see are because a target exec is stepping in to lead the company. I think it's too much exuberance right now. You can notice this upper sell zone that we have listed in here. That comes from our swing high, swing low analysis, and you can watch our videos on that in our video library. So we think that it's too soon for that. And maybe you can get up here to the $15, $16 area, but then we think we're going to get it moving back down over here into this February period. So maybe a little bit more upside in here for Bed Bath & Beyond, but we don't think that there is a lot. And we just don't think that this is the right time that Bank of America is screaming about. So maybe they have a longer term perspective and it'll be better in 2020, but it could be fighting some awfully bad markets in 2020 to be better. So here is Dick's. Look at that upside move. Now note the channel that it's been trading up in here. Now those of you that are students of cycle analysis can see the rhythm in here. There's your distance from low to low, you can see right over here, is this dominant cycle pattern that you can see. And then there's minor half cycles. Note this minor half cycle right in here. That's this right in here. Comes down and corrects and then explodes to the upside. So we are in this rising phase. It gets way above that rising channel and then stops. We think in here that this is just way overdone. Their earnings beat. Analysts are kind of mixed on this stock, not all that excited. Nice upside gap in the stock, and it should allow it to test this area above 48 again. So We're gonna expect to see that up there, but then we don't think that there's a lot more in there. So we're gonna look for this rally to come back up into here towards the end of the year, be into January, and then get into a bigger corrective period. As you can see, not much better than about 48 is what we see on this stock, but good earnings and this. A big pop in there, we think, is probably not done because of the upside gap. Here we're looking now at Best Buy. Sometimes I get confused with the BBBY and BBY, Bed Bath & Beyond and Best Buy, which I'm giving you both of right now. The stock earnings beat. Guidance was really strong. Analysts raising their targets in the stock. This was a bullish pattern. Now you can see the major low here. Note the cycles coming down right over here. Note the cycles coming down right here. So when you get into these corrective periods right here and right here, you get the big declines. And then you get into the rising periods and you get the big rallies. You can see that right in there. And we are late in this rising period in the first minor cycle right there. So we're going to look for this dip into these intermediate supports. Now that's an upper buy zone right there. That's between 83.40 and about, what is that? Yeah, 78.50 and 75.30. So we think it's going to dip into that area right there, and that is the buy zone, and we'll get another pop. So look at the tail that it left right in there. That was a little bit too big of a move, but I got to tell you, the stocks that have the best prospects for doing well are the ones that are doing well online, and Best Buy certainly has done a good job in developing their online business. They used to be the showroom for all the online businesses, but now they have the good own online business and competitive on price. So I do think that Best Buy pattern is looking good. Look at the major top right over here at 84.37. We think it's going to be able to surpass that by some minimal amount, maybe 85 to 90 somewhere in this coming month or two. So if it gets down into that upper support buy zone, well, I think it's a buy. Next thing we're going to look at is Under Armour. Now, Raymond James says this is a strong buy, UAA. We don't think so. As a matter of fact, we think it's a strong sell. So they say strong buy, we say strong sell. 12% gain on the week. Now I want to just share my analysis with you, and that is, you could see the cyclical action right in here, and specifically we're going to look at the minor cycles right there. And this minor cycle came down. You can see that. That's the first one of the two in this dominant pattern. And then it rallies right on time, almost perfectly, into the sell zone. We think that the probabilities of it getting above that are extremely small. I think the probability of getting over 20 versus coming down here and getting under 17 is about 4 or 5 to 1 based on this pattern. We think it's a screaming sell at the moment, and I don't care what Raymond James says, this stock does not look great. This huge downside gap that you saw right in there, and they have the problem with accounting practices that brought that big decline. They cut their full year revenue guidance, and we think that this uptick based on this is just nonsense. And we're going to get another move to the downside in there. And Alibaba gets this big upside move. Excited to see it come up and hit the fib target zone right in there. And again, you could see the cycle patterns in here. Note the minor cycle bottoms right here, the minor cycle bottoms here, and then rallying with both cycles pushing up. Remember what I said, when two cycles push up, big rally. Big rally. You can see that, and here we get the big rally. So when the first cycle peaks, you get a pullback. So that's this right in here. You could see that. That's this one right in here. It's got to hold up above this key low to remain bullish. We think that will happen. Hits the fib target zone. We're going to look for a little further higher prices in here, modest pullback, and then moving up again. Just because it's listed in Hong Kong doesn't mean it should gain 8% on the week, but that's really what we had. So kind of not a great reason for that. And China index not looking all that good, actually. So this is a Chinese e-com stock, and we think it's a little bit too much. Beautiful to hit the target zone. We're going to look for it to stall up in this area between 200 and 205 or so, and then give you some pullback in there. So that is the best 5 of the week. We're going to switch over to the worst 5 of the week, and again, we're going to start out looking at retail, but then we're going to pop into natural gas and take a look at Deere also. So your best 5 stocks of the week, we're going to switch over to the worst 5 stocks of the week. We're going to go from Alibaba over to Dollar Tree, DLTR. You can see that right there, Dollar Tree. Look at that huge megaphone in there, unbelievable. It has this big downside break, 15%, as they missed on earnings. Analysts all over it, downgrading it. Their guidance was very weak, and a 15% downside on the week takes it all the way down to these important cycle low supports. So if you look at the rhythms in here, and you'll note that we have 2 different cycles in here. We call this out-of-phase cycles. Now, what happens is that cycles, the longer cycles tend to dominate, be more dominant. And it looks like in here there's a minor cycle low here, which should give you a little bit of a rally, but then likely to move to the downside again. So as this cycle takes a hold here, we don't think that it's going to bottom anytime soon. This massive downside gap is leaving a lot of investors very stuck. That broadening pattern, just amazing. When you get this big downside break with the big gap on the downside, you don't recover very quickly. Forget about filling that gap. That's nonsense. And we would look for this stock to have only minor bounces and further downside. Support right over here coming into this 87.5, 89 area. We think that's extremely likely. And the question is it going to get down to these areas under 80? That is a possibility. So we're going to watch what happens under 87.5 if it does get there. Bad looking stock, bad action, 15% down on the week. And we would sell any attempted uptick in there in Dollar Tree. So now we're going to do something unusual. We're going to look at /NG. We usually don't look at commodities in this section right here, but I think it's important to do so as we look at natural gas. We're buffering right now, so I'm going to go off of that. The natural gas, of course, you would expect with the bomb cyclones coming and cold weather and all that we would be seeing some very positive action going on. That's not the case. They're actually looking at, actually worldwide, the climate is actually not as cold as it here is in the Midwest of Chicago. Of course, I'm down in Sarasota now where it's 80s and gorgeous. But the natural gas supplies is really the big issue. There are strong production going on and demand has been weaker. Natural gas falls 10% on the week, and you can see right in here, we're going to take a look at our cycles. Now we're going to focus on these kind of half cycles that we're looking at. Here's your big dominant cycle that you could see right in there, and then here's your half cycle that you can see right in here. So that's this cycle bracket right there. Look at it turning over here. See that abandoned baby right there? In other words, it's a gap up and then a gap down. When you get abandoned babies, that is often a sign of some reversal, and you can see we had that there in a big way. Now you get this giant move down some 10% on the week, and that is a bad pattern. We're expecting it to continue to decline out here until February, and any rally in here we think would be fake. Now, as far as the minor cycle that you see right in here, that's likely to give you a little bouncing time period in here. So you get a little bounces in here, but then we think it's going to accelerate to the downside again. This is a really bad pattern for natural gas. That's the weekly pattern. I want to show you the daily right in here also, and you can see that it comes down to that cycle support based on the patterns we're looking at. Follow it right in here. You could see those rhythms, and that this little bottom is due right there. So we're going to look for natural gas to give you a little bit of a bottom, but then where this big yellow zone is continuing to move down. So that's the setup for looking at the natural gas stocks, which did not have a good week. Hess down 7.5%. We're going to look at that right here. This is that old Amarada Hess. And you can see the cycle patterns gorgeous. I mean, really beautiful rhythms in here. And this really looking like it's turned over and getting ready to threaten that low. So we see this declining all the way out till March. We think Hess, not Amarada Hess, I'm still stuck in the 70s. That Hess is going to continue to move to the downside. We rate it as a sell in here and would sell any attempted uptick. Devon is the next one. This one you can see has barely been able to get up and rally. It hits these resistance zones and then moves down very sharply. I didn't put the resistance zone in here. There was one you could see about halfway up through right there, and we're expecting this stock to break down in a big way, also coming down till late February or March. So Hess, Devon, they look absolutely terrible. And you can see what the natural gas stocks look like. We expect natural gas and natural gas stocks to continue to suffer well into next year. We don't think that is the commodity, or that energies are the ones that are going to have very big moves. We think it's the metals. So that is a look at Devon. The last stock we're going to look at in the worst of the week is Deere. Deere looks to us that it's done. In other words, there's a top made in here. This is actually an evening star pattern right over there, and we think that it is ready to move to the downside for extended period of time. Down 4.5% on the week. Their earnings were a slight beat, but their guidance was bad. They really forecasted poorly, and that has, of course, investors nervous. So I want you to look. The green zones are positive. The yellow zones are corrective. And each of these cycles in here basically was higher high, except this one just barely a lower low, which kind of turned this down. It has these wide swings. You see that? And then once it gets into the yellow zone, note the momentum turning down right there. In this yellow zone, it continues to fall usually. So that's where we are right now. Pretty much looking like this can decline all the way out into the end of February there. So Deere, we think, is in bad shape and will continue to move to the downside in here. Don't like this stock, don't like the company's attitude, because they say it's really bad. And if they say it's bad, believe it, right? Investors are going to sell this one, and if the upside market gets this to tick up a little bit, well, consider it a problem. If you look at the yellow zones, you can see there are times in here where it ticks up and then gets hit, times where it ticks up and then gets hit in a big way. So we're looking for this stock to move sharply to the downside. We would expect 157, maybe as low as 151 in there to those major supports that you see there. That's a pretty good target for Deere. That is the worst stocks for the week. All right, so we're going to move into our short-term view for the coming week. This being a holiday week, not all that much went on. But before I do that, let's take a quick look at our level 4 membership. Level 4 is all in. I mean, it's everything. It's everything that we do, and there is so much in here that I think that you will be absolutely shocked by how much you can get by being a level 4 member. Level 4 members get everything that's in level 1, level 2, level 3, and of course level 4. The difference between level 3 and level 4 is that you get our charts on the Thinkorswim platform, TOS, which is our preferred broker, and that that just gives you all of our work live on your screens. Of course, if you're a level 3 member, then you get our updated static charts in our Slimulator rankings, which is just phenomenal. So let's just take a quick look in here, what you get as a level 4 member. The stuff that, of course, level 1 and level 2 get. That's our SIR daily snapshot, as you can see, stock index report daily snapshot. You get our SIR weekly outlook, the Spider ETF review, which is a good look at the different market sectors. You can see our reports that we put out in our Slim blog. And then you also get our Market Week minutes and Future Speak minutes. These are links that give you direct access to each of the things that you like, each of the symbols that you like in each of those videos, so you don't have to watch the whole video, or you can go back and just click on the stuff you want to review, because it gives you the time index link, and just go in there. And we also give you a little bit of bullet points on what we said in each of those also, so it's important. We have all of this great stuff in here that you can see. There's our Slimulator ranking systems. It's just absolutely incredible for the top 84 symbols. Gives you just great updates and our analysis on those most tradable, optionable symbols. You get our trade ideas, which is just fabulous. We're putting out between 2 and 3 and 4 ideas a day, and then you just apply your own analysis to it, your own style. Fantastic. Slimulator Momentum Tracker is now in beta. This is for investors. So if you become a free member, you can actually beta test that also right now, but this is also all included in level 4. Our trading ideas top charts, that stuff that you vote on. When our level 4 members ask for analysis on individual stocks, we put it right in here for everybody to see. So just imagine all of that. And here is slim charts that you get on the TDA platform. You also get our option bias indicator script. You get our market condition indicator script. And we once in a while put some things in here with charts and templates. You get all of that for the Thinkorswim platform. And here is our video library. Holy cow. You get our archive to Market Week, Future Speak, which is just unbelievable in-depth 24 futures that we do analysis on in that video. Tools for text, there's about 80 videos in there for you to learn all about technical analysis. Trader psychology, that's the stuff that may get in our way personally. Stock sectors, when I analyze different sectors of the market and give you good ideas about what's actionable. Big picture analysis, where I look in depth at the longer term perspective of markets. Style, strategy, and plan, that's all about your trading style. Lots of great videos in there. And IRA MO, we occasionally do some videos for longer term. And of course, if you're a level 4, you can send emails to the askSlim team and to ask me to ask questions about all of this. Gosh, is there a lot in there? All of that amazing content that we put out every single week. You want to become a level 4 member. If you're level 1 or 2 and you want to upgrade, you can do that on a trial. All of that is just fantastic information. And you can get our trials by just writing to Matt at askSlim.com. You could try it for a month for half price. Of everything I just showed you for level 4, just $73.50 for a full month. You can just power watch everything that you want as far as that goes. And then we also have trials for the other levels also. So write to Matt at askSlim.com and he will send you a trial. All right, so now we're going to get to the short-term view for the coming week. We're going to rate ourselves this week at only about 35 to 40%. Because we had misses in gold, though it's coming back on Friday. We're looking a little better in there. We missed on the stock market, so that doesn't look that good because we were expecting a dip, but there was no dip whatsoever. The bond market, we were mostly right. We expected the dip to be a little deeper than we got. Also, as far as the light crude market, that went well. As we expected, we thought it would be a small down week, which it is, and that it would turn down late in the week. And the same thing for the dollar. We thought it would be a up week and that it would test 98.40 to 50, and that's what it did. Let's switch over now to from Deere over to our daily chart as we go to /CL right here, and we're going to look at light crude. Like we said, we thought it would rally and come down. It broke this little pennant formation right over here, and then collapsed down 227, 4% now on the day. This is really bad. I'm going to put in see this cycle low right over here. If it breaks underneath there, which is around 54.90, that's going to turn this whole thing down, turn the intermediate pattern down. This looks really bad. I'm not sure what the news was that came out today that sent it down, unless it was the Asia soft data. But I can tell you right now, this is not looking good. The momentum is turning down. It didn't turn neutral even yet. It's been positive and being driven up. So this is next couple days are important. I think we're going to lose the upside momentum. There's a potential we're going to break down under this 54.90 area, and if it does, it's going to be negative. So light crude, we're going to call light crude a down week. We think that this is just the beginning of something right there. It failed, and we think it's going to break this area under 54.90. Then it's going to continue to move downside. The next downside support would be right around 50, just under 54, and then there's a cycle low support right around 53. So all of those are potential, and we think that the downside is much more obvious now than the upside. So these are all potential downsides in there. And we think that this is a bad looking bar in here on this breakdown, and there will be more down. We'll call it a down week, testing this area at 54.92 or lower. That's a pretty weak looking pattern that we're looking at right there. So 54.92, then 54, then 53. All of those we think are quite possible based on what we see here. Next thing we're going to look at is the gold market /GC. This came to life today, and we were expecting that to happen. Now it's right now up 940, so it's up now about $2.50 on the week. It's improving as we go. I'm really glad I added to my position in here. Now, what are we looking at? Well, if you look at this, our timing for gold and silver lows were right in here. So you see this silver line coming down. That's where we expected silver to bottom. We expected gold to bottom right around here, and we thought that silver weakness would kind of have gold stalling, and then it would begin to turn up. Well, look at right here. You see that upturn right there? Getting a little engulfing pattern right there. We had a little engulfing here. It really feels ready to go up. We're going to look for the upside in here to continue. Upside week. Now, momentum is still down. You see that? So we need to get this momentum positive to really give us a sense of the upside. You could see our projection for this bigger cycle right over here. We think it's going to get way up here into the 15s before you know it. But right now, we've got this resistance area to deal with and this negative momentum. You got to turn that up. That has to change before you can get the upside that we're really expecting to happen. Hopefully that will happen. And by the time that happens, by the way, you'll see gold at 1,500 already, right? So this bottoming process began right over here, and this is already 2.5 weeks old. And as long as it stays over this level around 1451, it's in good shape. And now we were a little worried about that, but now it's over 1470. So it's looking better for sure, up $9 in the day, 970 right now. So storming to the upside. Like I said, I added to my gold position this morning when I saw it go from negative to positive. That was $10 ago, basically, and I'm glad about that. So gold looking great. We're going to look for an upside week in there, and we're going to look for this momentum condition to improve. No clear sign of an upturn in here yet, but we get this action that we see today. We're starting to think that it is here. So I bought some AU. I bought some GOLD. And I think those are decent plays in here for short-term lows. Take a look here as we look at the dollar. Now, the key to the gold market is that the dollar not really make any upside ground, and today it failed. You see, it's like the third time that it hit this level right over here around 98.40, around 98.49, 98.44, something like that. It's not able to get through there, and you could see it turn down. So this cycle and that resistance looks formidable. Momentum neutral in here. It's been choppy. I don't see a lot of great momentum in there. We're going to look for the potential for it to try to test this level again. But basically, we're looking for this choppy action and a downside bias over here into mid-December. This period right over here, where we don't really see any real good upside for it, This is a good window for gold and silver to get away from these lows. Now, platinum already doing it, and copper is taking on a much better pattern. I am much more favorable on metals than I am right now on any other of the commodities. But I think that some of the other ones are going to catch fire also. Coffee really looking one of the best ones. If you don't follow that one, it's been worth a look. So metals, I think, looking like they have got good possibility. And the dollar, if it could just keep slushing around in here and not do anything significant, I think you're going to see gold and silver do really well based on that. We're going to look for a down week in the dollar in here as it gets up into this resistance zone and then begins to move down. We think that this upward momentum here, this choppy momentum, is just simply going to turn down again. That's right now slightly was neutral in here. It was positive, it went neutral, it went positive, and we think we're going to keep seeing this choppy period and momentum that it just can't establish anything yet in here that we're seeing. So that's a look at the dollar. We're going to look for a kind of modest downside week in here in this choppy momentum period. The odds of a decline, we think, for the near term are a little bit better than the odds of any kind of real advance. I'm going to say the same thing for the bond market, but maybe with a little bit more conviction, and that is /ZB as we're looking at the 30-year bonds in here. I think that they're in a sell zone and could get a pretty big decline. We're going to be projecting it to get down here to lows right around between the middle of this around 57.20 to about 57.05 right there. That's what we're pointing at, is right in this area here over the next couple of weeks. This is the sell zone. Now, again, momentum has been choppy right in here. It's barely established some upside momentum, and we think that it will give that up in this sell zone and move to the downside. Now, look at this big pattern right in here. You see that? It's early for any kind of a huge downside break in here, even though we think yields are going to be going up. We think that's further out over here. So into next year. Right now, we're going to look for the bond market to break into this area here and then get a rally. I think it is shortable in here, and that's kind of a range that we're looking at. As you can see, this high here around 160, this low here around 157, with the downside of the range where we think we're going right now. We're going to see, we believe, a down week. And again, the odds of a decline in here bigger than the odds of any kind of an advance. So the stock market, we didn't get right because we thought it was going to dip. Of course, we knew it would be a slow holiday week, but no dip whatsoever. And you can see in here, we showed this on Future Speak. This is the cycle that we were looking at right in here that's 20 days long. There was also a minor cycle that cuts it in half, which is 10 days long. We had this shifted pattern right over here in smaller. These are now 18 and 9, and we've moved back and forth between 18 and 9 and 20 and 10 days in these patterns. This one right over here, an 18-day pattern, and that's now moving up. You could see very clearly. The NASDAQ and the Russell even shows this clearer. So we're actually day 4 or 5 off of this low. So we think that the stock market is going to flatten out here. While this has all been positive and the momentum strong, momentum still remains very strong. You're now getting up to these major fib extensions. We talked about 3160 as an upside target. It got up to 3154. This right over here is 3175 on that next target. Now, this is a tough spot for it. So you're getting all of this resistance right in here and all of this upside push right in here. When you get that, you get a flattening out. And then these cycles come down into 1218 on the daily, and then the weekly low goes down to 1216. So right into that second to third week of December is where this corrective period comes in. That's when we're looking for some modest pullback. This is just minor pullback period right in here. Maybe it gets down into the support 3130, 3115, right in there. That's not very far on the downside. And then just getting its way up again. 3130 is not much of a decline. 3115 really isn't much of a decline. And that's expected that it will get in there and then try to move to the upside again. But again, we're looking at a flattening out in here based on what we're saying. When you get these two forces working, this clear upside momentum and these resistances, you tend to flatten out. The key, of course, is this area right in here where these cycle supports are. Those, let me move this note down on the shortening. Those are very important. If you get that underneath that level, this all changes. Not only will it be flattening, but it will move into a declining period. So that's the key. That's way down over here at about 3,100. That's only 46 points. It wouldn't be that ridiculous to have that kind of a breakdown. We're not going to look for that, though. We're simply going to look for testing into these rising minor support areas and then get kind of a bounce. So we're going to look for a small downside weaken here as it fights the upside momentum with that target of 3130 to 3115. And then again trying to get to the upside. The period that we're looking for the market to accelerate to the upside again begins after this right over here. So after we get into this third week of December right there, it likely will turn up into year end and then continue up into January. So this is just a modest corrective period we're looking for in there. With all of this upside momentum, and I've gotten emails from people that have been in short positions, some saying that, well, you said it's going to pull back a little bit. Well, so what? I mean, we've been clear about the fact that the forces are to the upside in here. Looking for a pullback means you look for a place to buy. It doesn't mean you're short against all this super strength to look for the market to pull back. So those number of emails I've gotten about, where's the pullback? Well, you just don't expect significant pullbacks under these conditions. The conditions of momentum are super strong. So we look for that to continue. You got to even wonder whether this period over here is shortable, and we're actually looking for that decline to be somewhere around 70, 80 points on the S&P 500 during that period. But the problem is that you look for a top in this kind of market, and it's just really painful, especially if you're using options that are depreciating assets. So again, we say caution to the shorts because the momentum is super strong, and even though we see a flattening out in here, it's not a real reason to be much on the short side. Man, I'd rather be long gold than be short the market right now. I'll tell you that if you really want to make a play. So this is the S&P 500. We're going to look for a flattening and slight correcting, but not all that much. And you can see this monstrous upside momentum that's been so clear in here. If you don't believe in the slim ribbon, I mean, you're not believing in one of the greatest indicators there is as far as momentum goes. It just does not miss these moves, and you could see the 13-day moving average, the center of it being just absolutely fantastic. So super strong market, modest pullback potential. We're going to look for slightly down on the week, and not a whole lot more than that. I hope this has been great information for you. Make sure that you come and look at our website and write to Matt at askSlim.com to get our trial, 1 month trials, especially for that level 4 if you're TDA users, or even for level 3 if you want to just get our static charts with all of this analysis in it, plus our Slimulator rankings program, which is just incredible. And for investors, the Slimulator Momentum Tracker in beta, we're updating that one all of the time. So there's some glitches in there. We're working on that, but we really want you to look at it because it's fantastic. So that's it. I want you to have a great weekend, a great shopping if you're going a little crazy out there shopping, and we are always wishing you great trading.
Well, I'm going to the city and I'm going to do a city.